The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And as we start yet another show, it is a beautiful September 26th. Another wonderful day at the head of technical trading and investing, TFNN.com. I am your warm and fuzzy and koala bear-like trader here for yet another day. And we've got a market that's up a little bit out here. We're up 11 points on the S&P cash. After having kind of an exhaustion day yesterday, probably not a little surprise. What we do have, though, is light volume. We were doing about 2.15 billion shares as we started the show yesterday. We're starting it off with 1.75 billion shares. Now, there are a lot of moving pieces going on here, and we'll talk about them, but I think this is going to be a long and slow pullback in the markets, and we'll get into the reason why here shortly. On this day in 1955, President Dwight Eisenhower suffered a heart attack, and the stock market has a coronary right with him, plunging 6.62%, which even today is one of the worst daily losses of the last 100 years. Things can come right out of the blue. We talked Wednesday about some issues that we had with what can I say? Hang on a second here because someone's interrupting me, and if it was actually done correctly, it should be up. So we'll go back here again and do this. So there we go. Now we should be back in business, unless something else is wrong. Well, if something else is wrong with your system then. And anyway, going to be an interesting deal where, we look at what's happened. Anyway, on Wednesday, actually, the story starts on Tuesday night, for those that may have not caught the shows this week, but really was looking at a item that came through so late at night and that everybody paid no attention to, and that was about 10:07 on Tuesday night, and that was Bill Gross was being investigated by the SEC. So no movement, futures didn't even blink, nothing happened. The next morning you couldn't even get a mention of it on either CNBC or Bloomberg for the most part. To me, that would have been huge news. You have the guy that is the biggest bond manager in the world, and it has a issue with the SEC investigating him. He's also been known over the last 6 months to be incredibly nutty, boisterous. I mean, a lot of words come to mind, at least from the people that worked around him. He lost the heir apparent to taking over that fund and taking over that business at PIMCO. And so, you just see some stuff, at least I've got a sense now of what's going to be important in the next few days. I talked about it on this show on Wednesday and on when I sat in on the show for our friend Steve Rhodes, who's back today, thank God. But it was one of those deals where you just know what's going to happen. I wrote in my newsletter today in the Tech Insider, which I don't know if it's out yet or not, but it reminded me a great deal of what went on in Jesse Livermore's book. And what happened was there was a big event. There was about 3 or 4 days that nothing happened, and then the market broke. I think yesterday was the reaction to what we are seeing today, and I'm not a big bond guy. I probably would have known what to do. I don't think anybody knew that that Bill Gross was going to yet another fund, and I'm surprised that they even got involved with it. Of course, it cost them $6 billion in market cap, at least it did earlier this morning. So not a lot of interesting stuff going on there, at least for them, just all bad news. But I kind of knew something was going on. I called up Andy Heck, actually, at midnight, my time, to ask him what was going on. And we didn't see anything, and the charts didn't say it at the moment. But there was more than enough warning, I think, that things were going on. And kind of funny that we still don't hear a peep about the SEC investigation. If you believe the leaks coming out of it, he was manipulating the value of bonds in one fund and putting them in another to make it look better. And one of those robbing Peter to pay Paul kind of things. Well, anyway, what we do know today is there's going to be a tale of two cities. One city is that you can click on a button and you're out of his bond fund in 5 seconds, or at the end of the day, more likely, or that you've got a giant kind of thing going on, like a 401k, a retirement plan with a retirement committee, and those people have to meet, and they have to decide, and they have to chew on stuff before they can do anything. And guess what that's going to mean? And that's going to mean there's going to be outflows on the bond market for 2 or 3 more months. Some of those are going to probably start on Monday. But for the majority of them, 401ks will take an incredibly long time, 2 or 3 months. And guess what Wall Street loves to do, just like they went after Ackman for a short of Herbalife? They love to get on the other side and squeeze you. So my guess is that we're just starting to see the first ramifications of what will be this bond-induced haze for probably 2 or 3 months. And, of course, a bond market massively bigger than the equities market. And I think Bill Gross, what they have, $2 trillion? I think that's what they had. He managed $2 trillion worth of cash. And, a trillion here, a trillion there. Soon you're talking real money. But as we look at that and as we check it out, it will be pretty much what we think, which is that it is going to be difficult. And even with the market up a little bit, what are we at here now? Okay, we're up 13 points. There are going to be people buying this, but my guess is we're going to have a kind of an ebb and flow back into the bottom of these markets that's probably going to take months. I don't think it's going to happen all in one day. I think I said earlier this week that the puts I bought were December puts. I didn't think this was going to be overnight. I think it's going to be slow and steady. But I think we can make a fairly decent assumption that the tops are in this market, and it will be pullbacks. Now, another thing that makes me think that we probably are going to see sellers in the equity market besides the bonds and what they're doing is the dollar index. That dollar index tells us one thing. All these multinationals that were getting maybe 20%, 25% earnings increase on the dollar exchange rate, it's gone. They are all going to have to come out over the next few months, now that we got the S&P 500 over, and start guiding down. That cash will not be there, and that's if they still do the same amount of business they had before. My guess is it will actually even cost them a little bit more business. So, there's always that point where things are as good as they can get, and we're probably fairly close to that. Now, does that mean that most people will recognize it? Just like the Jesse Livermore story where there was the giant event in 1907. Everybody looked the other way. I actually highlighted it in the newsletter today. They didn't want to know. I think it's the quote, something like that. They didn't care, they didn't want to know, and it did not matter. And, interesting story. Still always find interesting stuff in reminiscence of a stock operator that applies to us today. But, what can you say? 1955, I didn't know Eisenhower had a heart attack. Never saw that in any stuff. Apparently, it wasn't a big deal because he was still around in 1959, wasn't he? When Nixon ran as vice president. Who can say? It is a mad market, and we are going to get to look at some of these things here fairly quickly. Let's go ahead and start bringing up some charts. Of course, bond funds. Of course, Janus Capital moved fairly well. We talked about a lot of these stocks, especially in the sectors that were in finance, had made fairly decent highs, and I'm pretty sure we've got confirmation. J.P. Morgan out here, we went over this, and I guess I'm going to have to grab my spectacles here. And, we've been talking about this since Wednesday, but yesterday, higher volume. Now we're getting a little bit of pullback. I don't think there's the big money that there is in other stocks out here, but I think we can look at J.P. Morgan and Goldman Sachs and, what's the other one? JFM, is it? JFM? What is it? James... I'll think about it in a minute. J.P. Morgan. What else do we have? Oh, Goldman Sachs. We'll take a quick look at Goldman Sachs. Another one that looks like a false breakout is Goldman Sachs out here. And, you had a little bit of volume up here at the top, but it's certainly pulling back. What you didn't have is the kind of volume you really wanted when it broke through the highs. And when you look at that, you're looking at September 12th, 3.3 million shares. You wanted probably the highest volume to the left of the chart. That was the March 7th high at 4 million shares. Even being conservative would have been 2.9 million shares. That you got 3.3 million shares. Yeah, it's a little higher volume. It is. Are they probably a little bit better off than the rest of the stocks? I think that is also. Let me see. RJF. Okay, that's what I wanted to look at. RJF. You can always give me a call, too, at 877-927-6648. Another one of these broker-dealers out here looking weak. We were actually shorted. I covered it yesterday. Not enough damage in the thing. And I should have taken my own advice earlier this week, which was stay away from these financials. They have the ability to basically help themselves. But this one, 1.5 million shares, 1.4 million shares back up at the April 1st high. And, of course, we get into the September 18th high, 870,000 shares. That's pretty much what's telling me everything I need to know in this market, and that is the financials have no juice. The emperor has no clothes. I think it's time to sit on your hands if you got a short position. We will be back in a few minutes. Give me a call.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And there's an interesting concept when people ask me about my spidey sense this week. About seeing that article and maybe looking at some other things that I've been reporting this week. And there are a couple things that changed the way I traded. First of all was finding out that the news was poisonous for me for probably the first 8 or 9 years of trading. And basically I hid from it, turned off the TV. And somebody recommended, that was a fairly decent trader, that I read the CIA manual on how they look at data and find out if it's true or not. So many people are always lying about so many things, especially to CIA agents, who are letting things leak that probably aren't true. That there is kind of a way for you to go back through those things and figure out if there is any kind of truth and why they might be lying to you about it. You might want to read about it. It's on the, basically there's a dissertation, and it's called On the Fourfold Root of the Principles of Sufficient Reason. And it's somewhat kind of philosophical. But between that and the CIA manual about at least having multiple sources, trying to figure out why someone might tell you what they're telling you, do they really have a reason to do it, or are they just doing it out of the goodness of their heart? That's the one you need to watch out for. Maybe they're just stupid and passing on something else someone had told them. But an interesting read anyway. A couple of days ago or yesterday, someone asked me about shorting SanDisk. I said that I probably wouldn't be short either one of these stocks, that there was better hunting out there, let me put it that way. Micron came out with earnings. I also said that Micron had this new memory. And we talked about it last Friday on the Tech Insider with Tom O'Brien. And what this is really going to do is mean that memory is going to be cheaper for what's known as flash memory, like USB drives, SSDs. And that means they're probably going to get more business from it. So if there was a stock out here that I wouldn't be shorting right now, probably across the next 6 months, it would probably be these memory manufacturers. They'd come down, but the market's still good. It's still straight. They've got a new version of memory that's probably going to make the margins that are fairly good. They're keeping the costs down. I didn't see how SanDisk reacted to the news. Not badly. They're not up, but I guess they're up a little bit. Are all these stocks probably going to come back a little? Yes, but to me, I wouldn't be shorting Microsoft. I wouldn't be shorting Intel. I wouldn't be shorting SanDisk, and I wouldn't be shorting MU. Are they going to pull back? Yes. Are you going to make a lot more money on probably something else? Yes. So I would stay away at least from those four. They all have reasons that you could think out fairly well that they're going to have a good next few months, maybe even 6 months. Now, are they going to probably pull back with the general market? In my opinion, yes, a whole lot less than others, though. There's so many of these stocks out here that have absolutely no way of making money. And those are the ones you want to be short. Now, what is it? AGNE? Forget Angie's List. What was the name of that thing? Let's see if I can find it. ANGI. We talked about this one too. I spotted it early on. ANGI. Been around for 15 years, went public, still doesn't know how to make any money, never figured out how to make money in 15 years. And of course, it's going to auger in all the way and they'll be out of cash. One of the things you also want to look at is the burn rate for these companies. How much money are they spending and how fast? Because these are the ones that are going to get absolutely not just little profits to the downside, but slaughtered to the downside. And Angie's List, if you could have ever gotten the shares short, everybody else already piled on as soon as they were available. It was pretty easy to figure out as soon as share lockup was over and everything else that this thing was going down one way. Apple, we're going to be talking about it tonight. There's probably a fairly decent reason for its huge move down yesterday. It's recovered some of that. My guess is that we're probably going to stop at about $100 on this. But we're going to go into the people who know this company best. Do you think that they were buying or selling when you look at this chart? Are they buying today or are they selling yesterday? It's going to be interesting. Anyway, you can catch me at 4:20 Eastern Time on the Tom O'Brien Show. We'll be talking about that. We're up 16 points on the S&P cash with light volume, 1.88 billion shares on the New York Consolidated Tape. It's going to take a while, but I think we're going to start sliding into the end of the year now. We'll be back in a minute. Give me a call, 877-927-6648. Post a message in the den.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hello. There we go. As we come back, Chesapeake Energy Corporation. There are a lot of these stocks out here testing gaps at lower levels, but you think, especially with the S&P's up 16 points, these things would really get rocking. And I think that's a good indication of the volume in this market, 1.9 billion shares right now. Just no juice. A lot of people wanting to get back in these stocks, not a lot of sellers. And they can move it up on fairly light volume. Of course, on Monday we start fund buying, and my guess is that they're going to make sure and hang this up for a few days into next week to make sure that these funds buy at the top. There's no use giving a sucker an even break, but I think that we're probably going to be around this 1980 area probably throughout next week. Probably won't see any real movement probably till later next week, I imagine. But look for extremely light volumes Monday, Tuesday, and Wednesday. Probably a good indication that they're holding this market up for fund buying, and there are not a lot of buyers. But as long as people are not seeing the stock market go down, maybe they won't pull the trigger and sell their stocks, which is exactly the way that markets in retreat work out here. So we're seeing a nice little pop. Of course, everybody's got to buy every dip in this market. Whether or not profits are going up, whether or not things are getting better, it's worked for this many years. You got to do it. And I can imagine what we're going to hear on the financial infotainment shows, and that is you've got to buy. In fact, this morning, that's all I heard. Anyway, when we look at stocks like Chesapeake, I know people talked about this, wanted to buy it forever. Well, if you wanted to buy it, today was the day. You had this nice, wonderful pop out here, 35 million shares on, August 1st of 2013. It gapped up with 35.1 million shares. We're back into that last few days. And what do you have for volume? 5. You had 10 million shares yesterday. 9.5. Today, 3.4 as it filled the bottom of that gap. So a lot of them you can kind of look at as being those. Now, and natural gas up a little maybe, but kind of tough. When we look at other commodities out here, gold off just a little less than $7. Silver up almost 10 cents. We've got platinum down $12, and copper, looks like off 8 cents or something. And then we've got crude up 92 cents. That's interesting. Anyway, that was one of the ones I wanted to show today. Again, you can give me a call at 877-927-6648. Some of these stocks haven't really stopped, and kind of watching these up here at light volumes. The Centeer Corporation looks like one of the ones up here that just not a lot of juice coming up past these highs. Let's go look at a little shorter version of this thing out here. And, is volume really tapering off? Pretty much. The last big high out here was July 22nd, $81.98, 1.5 million shares. We see 878,000 shares on the 24th. And the last 2 days after that, not much volume out here. What do these guys do? Let's take a quick look and see. Multi-line healthcare programs and services in the United States operates in two segments: managed care and specialty services. Not the worst looking stock out here, but there's still some low-hanging fruit out here. Computer Sciences Corporation, CASC. Like I said, there's some out here that are pretty nice. Now, this one's been sitting on a gap as support for a long time. I'm looking for these things to fill at least half, if not more, of the gaps. And this is awful close. So maybe 1 or 2 more days down here with light volume, you might be able to have a bottom in this one. What you saw in this, though, of course, was the February 26th high with 1.5 million shares at $64.10. Broke through it, but with half the volume on July 24th. And, of course, that pretty much put an end to it. You came down with very heavy volume of 2.9 million shares, but now we're underneath that, and the volume is really shrinking and everything like that. But when we talk about gaps getting filled, there's pretty much no shortage to the amount that will. 8x8 out here. I think this one is if I'm not mistaken, a voice over internet protocol company. I tried to buy it once a long time ago at $6 and it didn't work out. 2.3 million shares June 5th, $6.68. And, of course, into it the last couple of days, 1.4 million shares. We've gone below it. You need to close back above that previous low to get a buy signal. But a lot of these smaller companies out here that have been savaged, beaten, sodomized, are all kind of coming out of volume. That makes me think that we are getting ready for the next sector rotation, which is these mid-caps that will come out and get savaged and beaten and spindled and mutilated. Mid-America Apartment Communities, MAA. I think we talked about this one the other day, maybe even yesterday. This thing gapped up with 1 million shares on February 6th. Got into that gap yesterday. Nice little doji out here. You got to love that with 500,000 shares. But what you don't like today is this 200,000 shares today compared to that 500,000 yesterday. Probably a good indication that you're going to see these things bounce a little bit. And it's probably going to take an entire market to hammer on it to get it down further. Ozzift management, capital management group. This one is broken through, and this is why I continue to be a little bit bearish on the market. Seeing a lot of these stocks that had high volume lows continue to melt on down. And when you look at those like this one, volume picked up yesterday. It wasn't enough to get into that 3.6 million shares that we saw on April 28th, that it's broken with lighter volume. But not a lot of indication that we're coming back. Now, what I see in this is deflation in a lot of these stocks, so you have to keep an eye on it. SkyWest, another one out here. I thought all these companies were doing well. And well, maybe a little tougher out here. Okay. So what do we have on SkyWest? SKYW. Nice test of its low out here, $8.41. August 7th low, 780,000 shares. Now, we've gone below it, but we have not closed back above it. And normally these things should bounce right back. When they don't, you really have to start watching for these, and that's why I continue to watch. Another sector that I'm starting to see kind of come out is these REIT-ETFs. And this one didn't test with as light a volume as you would like, but seems to have a nice little bounce in its step today. The June 13th low of Simon Property Group, SPG. The June 13th low, 162.56, 1.9 million shares. We got into it yesterday. We've gone below it. We were going to close back above it. So you are back in the trading range, back up to 173.31, which was the previous high. Now, the problem you're going to have, though, is you did have the high volume down day, and that is on the 12th. That day came down with 2.8 million shares. 449,000 today means you're probably going to get up to 168 maybe, and find the steel curtain defense of the Steelers right in front of you. So some of these have bottomed. Most likely what you get is a lot of sideways action, and then you get the surprise as long as markets continue to move down. Let me look for something, because I wanted to show you this, which was summation. Give me just a minute here. I'm trying to find it because I don't think I have it locked here. Maybe it's here. Maybe it's not. Maybe I'll find it. I wanted to show the summation index. I've got it, of course, linked at home fairly easily. Okay, calculation, everything else. Does it tell me what where the chart is? It does not. Okay. Let me see. Do we have it? Maybe here. Nope. I have a lot of references, but no Google search hit. We're up 19 points now on the S&P cash, 1.98 billion shares. So getting a lot of that back. It's nice to be, 20 points off the lows, but again, not a lot of volume out here. My guess is they're going to hold this thing up, or try to hold it up through next week's fund buying. And I'm looking for probably 1980 as the central point for next week. See if we have anything else out here. Let's look at Apple. It's up at $149, AAPL. To see if there's anything. This has really made another one. And you kind of have an inside day, but boy, take a look at the volume yesterday on that one. 100 million shares yesterday. Today, coming back up to that gap down with 44 million shares. So a pretty good indication that the energy is to the downside. Is the market totally cracked? The answer is no. And like I said yesterday, I think a lot of these big, well-known stocks, the biggest of the biggest cap, the bluest of the blue, are going to find people buying them. If you're in a mid-cap or a small cap, I think you're going to have very few, if any, friends. IBM. let's take a look at, when we're talking about the bluest of the blue, let's take a quick look at IBM and see how it came down. Well, volume picked up yesterday a little bit, 4.1 million shares, 1.4 million shares today, so it's coming back just a little on this thing. I think if you could get up at 192, I'd probably pull the trigger short on this thing. You need just a little bit, and like I said, fund buying next week. Might find some people out there buying some IBM. And the story's not all bad. It's just kind of bad for the next probably year and a half on IBM. And certainly this is one company where they're doing so much overseas these days that the dollar index has got to hurt them. So we will keep an eye on that. CHK. As I said earlier this week, this bounce is probably a gift. If you're long, you get yet another time to cash out without a severe penalty if you're looking at it. Let's look at GNTX. For some reason I was looking at this one. So maybe we can look at a bigger one and see. Well, this thing kind of gapped up. It's kind of filled that gap already. That gap happened on October 22nd of 2013 with 4.1 million shares. That's been acting as support on that day. And it kind of back into it. First time we came back into it with 900,000 shares on April 15th. On this one, September 26th, today, 700,000 shares so far. So maybe not. You know, like this thing probably to close back above 28.32 to get a confirmation on it. But not a bad looking chart out here. This is one that has a fairly decent long-term look to its chart. Engaged in designing, developing, manufacturing, marketing automotive, dimming, rear view mirrors, and electronics. Well, they're in the wrong sector, aren't they? At least if you've listened to me. But maybe that tells you everything you need to know. Again, I'm not bullish on any of these. I think they're going to go sideways for a little while. We're going to get yet another surprise, and this market's going to gap down, and that's going to be it. But I digress. But I digress a great deal. What else do we have out here? I'm just going to look at my stocks real quick. Now, I said that there were stocks that I wanted to buy, or I thought I'd like to buy, but they just continued moving down. Molycorp is one of those. I was looking up here at the test of July 10th. It closed below that $1.61. Never really came up with any volume, but a pretty good indication of what I think that this market is doing. Kind of see, you know, the kind of market that we see in gold and some of these other ones. A deflationary market that puts pressure on all commodities, and I think we can say that we've kind of seen that. But certainly in Molycorp, this thing has gotten down to the penny status. But even today, you would think if you were going to do some bottom fishing, you'd get it. But of course, one, it's a small cap. Two, it's a commodity play. A lot of times all you can hope is that you just break even with the close of yesterday, and that's kind of what I'm looking at in a lot of these. Let's go back and look at some tests that I had last week. When we come back, we'll do that. Give me a call, 877-927-6648. If you would like to have something and you're in the den, just post it. Maybe I'll get a chance to hit it in the last few minutes of the day here.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Wanted to look at a couple of these stocks, and you're up 20 points on the S&P cash. You should be getting some love. Shouldn't be having a little doji out here. Now, maybe this thing starts a little ABC, and we're in the B2C leg right now for Tesla, but not a lot of love, especially for a stock that's very short. You should be seeing some movement in that. Same thing with IBB. I mean, this is always the thing where people come in and start buying these, right? Is this better than a down day? I think the answer is yes, but we look everywhere out here. Dojis maybe a little higher, but certainly nothing compared to the volume we've had over the last few days, so we'll continue looking at those. We talked about a couple of the stocks out here in China. They had better news overnight. If you looked at the chart, certainly these things should really be running now. And that we've had 2 or 3 days out here with these things just going sideways is a little suspect. But I think these China companies, if you had to get into anything, I would be looking at these. Sohu, SOHU out here. The April 28th low, $52.68, 2.1 million shares. And of course, this thing pretty much got slaughtered because Alibaba was coming to market. People were selling it to raise funds to buy Alibaba shares. But not a bad time. If most of the time people wanted to be buying these things when they were red hot. Starting to look a little bit better out here. Kuaihu, another one of these Chinese companies, same story, a little different looking chart out here. Still need it to close back above $74.10 to get a signal. And again, that's the problematic part of a lot of what we're looking at here. We have lighter volumes, but no real reaction out of here. And this is when this thing gets dangerous on a market that is low volumes, no immediate bounce back in a lot of these stocks, and that becomes problematic, especially in these China stocks. I still can think that there's going to be at least some kind of problem out here. Now, do I want to look at that one? Do I want to look at some other one? We've had some pops back in here. Another big stock out here that's kind of interesting to me is PepsiCo. We had a nice 10 million share high on July 23rd, 2014. Nice pop, $93.09, 5 million shares on August 26th, and 6.2 million shares. The volume was just a tad higher on August 26th. And when I start seeing a lot of these, General Mills and PepsiCo starting getting a lot of love, but no volume, that generally is a good indication that we are seeing enough of these people looking for safety trades in the market. So that also needs you to get rather worried about how some of these things go. But if there are two things I'm looking at right now, it's stocks at highs with lighter volume that have pulled back into the trading range, and these stocks that should be bouncing that are not. Now, maybe next week they start bouncing, and maybe that relieves a little of the pressure. But a great deal of these stocks that had come off highs that were in the Russell 2000 are hitting these lows, and they aren't getting anything. We continue to see a summation index that is extremely narrow. And, we get these kind of like gas bubbles that as soon as we pull back a little bit. But I don't know if it's anything to really think about. I think we're going down, and it's going to be volatile between now and the rest of the year. It's going to be because of bonds. And the dollar index. Make sure you sell when you can. Today's a good day. Not when you have to. See ya at the 4:20 hour with Tom O'Brien for the Tech Insider.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.